The S&P 500, NASDAQ hitting fresh record highs again. Deja vu. Okay, our guest says now is the time to start hedging your portfolio for volatility. We're joined now by Eddy Gifford, a wealth advisor at TACTIVE. Thank you very much for joining us. You think now the sun is shining, but people should buy an umbrella?
Well, we're at this point where since October, the markets have pretty much gone straight up. We had a little blip, at the beginning of the second quarter, and then things have just kind of rallied. We are seeing small caps not participate in a lot. We're seeing most of the market is due to the top 10 stocks, not to the broad market in general. And so because of that concentration, we think it's a good idea to not necessarily get out, but maybe start implementing some hedges or maybe take some profits. I mean, everybody has their own style when it comes to hedging risk, but you're not going to be disappointed when you look at your statement and you see that you're up 30-40% over the last 9 months, and you took a little bit of money off the table, but you will be very, very bummed if the market decides to breathe because earnings season doesn't do as well as anticipated, or because volatility surrounding the election, or because September is upon us, and September is never a good month. And for all of those reasons, it might be smart just to kind of play it safe a little bit right now. And I'm not saying don't get out or get completely out, but it's okay to take some profits or implement some hedges for sure.
One simple way to hedge would be possibly just buying a bond ETF or upping your bond holdings.
Yeah, you could up bond holdings. Obviously the scary thing about that is what if inflation turns and inflation turns, and it doesn't seem like that's going to be the case, but what if it does, right? I'm just playing devil's advocate, and we end up in a 2022 type situation where the market is going down because rates are high and bonds are going down because rates are high. And so I would lean more towards short duration if we were going in the bond space. I might even lean toward some type of managed future ETF that doesn't actually participate in equities. Or you can go with the old school VIX also. So there are different ways to play it for sure.
What about the big tech stocks? I mean, would you go on owning the Magnificent Seven, for example?
I think nobody is going to be willing to sell them because they've, doubled or tripled or quadrupled their money over the last 2 years. And for some reason, people just don't like to pay tax. So, I think it's one of those things where you're going to have to continue to hold them. If you're in a situation where you are holding the individual positions and we have significant embedded capital gain, then that's where you might use some put strategies with options, or you might use some volatility strategies, or with ETFs. But it's always hard for me to convince people to sell when they're up that high, because they're just like, I don't want to pay the tax, and it's a delicate balance for sure.
What are you looking out for in the forthcoming earnings season?
Well, we're really paying attention to both energy and tech. Obviously, tech has been driving energy, and energy has been driving tech. But what we're trying to really pay attention to is how much of the lag effects have actually started hitting these companies. We've had elevated inflation for a while now. We've had high interest rates for a while now. And so if we start seeing that actually come into the guidance on the tech and energy companies, that's where we start to probably get more defensive in that scenario. So we're really paying attention to what the tech companies and energy companies are saying from a guidance and forward-looking standpoint based on the elevated interest rate environment that we've been in and based on the inflationary environment that we've been in.
I want to get your take on regional banks, because, of course, over the past couple of years, we've had some scares. 2 of them had to be propped up. They nearly collapsed. Is there value there in those regional banks in the States?
I would say it's too early to jump in at this point. There's still a little bit too much unknown in that space. When you look at the regional bank sector in general, it owns a lot of commercial debt, and we have a lot of commercial debt resetting in 2025. And guess what? The interest rates are much higher than they were when they originated that loan. So I don't think we're out of the woods yet when it comes to regional banks. I would definitely stay away from them right now. If you're really thinking that you'd like to build a position, I would do that over like a 2-year period in dollar cost averaging and just take advantage of the volatility. But if I had to go all in on one thing right now, it would definitely not be regional banks.
The energy stocks, you see value in those?
Yeah, definitely. I mean, we've seen all year where energy has been driving technology and technology has been driving energy, whether we're talking about artificial intelligence, we're talking about cryptocurrency and mining, or just talking about the electrification of the globe in general, where everyone's going more green. And so that's driving energy. And then the technology is driving the energy more because of this rapid, infatuation with artificial intelligence and the continuation of that. And so, we like CEG as a stock there with their diversified energy solutions. And it's already up almost 100% year to date. And it could do it again if the demand stays strong.
And you're not by any means, you do see some promise in tech stocks. You're not by any means saying turn your back on them.
Oh, no. And definitely the AI craze is still there. I think at this point, a lot of the concentration is kind of like filtered its way through. I would lean more toward using an ETF like the QQQ or like SMH if you want to lean into the semiconductor space. Of course, if you're looking for a kind of an off the wall, hey, how can I play this space in a different way? Camtech is actually a really interesting play. They're a smaller stock when compared to the giants, obviously. And they're inspecting all those semiconductors before they go to market. So they're the ones who basically give it a green light or not. And so we think that stock could do really well, and it has done really well over the last couple of months.